Alrighty guys, today we're going to go over the trading strategy I plan on using for 2025. This is more of a manual trading video, not an automated trading video. Although stay tuned because we have an exciting SPS Auto Trader update coming out probably next week, as well as one of the members found a strategy that made $42,000 in the December contract with only 2,000 drawdown. So we'll be showing you that this weekend as well, I think. Okay. But I'm going to go over, the strategy that I plan on using going forward in 2025. Okay. So let's go over kind of some of the indicators that we use. Okay. So this is it. It's called Say Hi. I don't have a referral. If you guys want a referral, let me know. I'm sure I can get one for you. It's a paid indicator. Okay. It's, I think, like $400 one time for any platform that you want. And what this is shows overlapping fair value gaps and off of many different time frames. Okay, so I guess to give it to you simple, here, we are going to have the blue fair value gaps here that are overlapping small time frame fair value gaps, and the red is just regular higher time frame fair value gaps. Okay, so the brighter the color, the more gaps are overlapping. Okay, so you can see here there is a light blue at the bottom. That's just one gap. There's a light red at the bottom. Here you see there's brighter blue and brighter red. That means these are overlapping. Okay, so it's a higher point of interest potentially. Okay, now if we zoom in, we'll see some other indicators. These are basic Bollinger Bands on the chart right here. So basic Bollinger Band, if you don't know what Bollinger Bands are, it shows the volatility of the market. The tighter the Bollinger Band is, the less volatility. The wider they are, the more volatile. Okay, so it's a good way to kind of gauge the market sentiment as well. And if the lower band is kind of tightening, you'll see it's kind of sometimes arcing up a little bit. Then that could be a better signal for you going long, and vice versa for shorts. Okay, so let's explain the strategy now. So I like to mark out the start of the day some points of interest. So I mark out mainly liquidity points. So right here, we have some equal highs. We took that. This is what I had marked out this morning. So I'm going to go over a little bit what I had this morning. Equal highs right here from 7 o'clock this morning. Okay. I also had some lows marked out right around here. We had a low here, low here, low here. So pretty much equal lows there. And then that is it for that. And then I also marked out this giant blue gap is from Sunday. We gapped down about 300 something points on Sunday. Maybe not 300, but we gapped down 150 points. And I drew out the 50%. So I took a fib retracement tool, went from the high of that to the low, so that gap, and I marked out the 50% of that gap. Okay, so this is the 50% of the gap right here at 21.838. Okay, so I marked out that. Let's change this so you can see it. Bring it to front. Okay, and this is pretty much all I had marked out this morning. Okay, took this on the live stream. I didn't call it out per se, but so now let's dive into the strategy. Okay, so I like to short when we're outside of the band and long when we're outside of the lower band. Okay, when we're in the middle of the band, I don't usually like to do that much because you just get chopped up more. Okay, but if you're on the outside of the band, generally we like to retrace in. So if we look over here, we move to the outside of the band, we retrace down, move to the outside of the lower band, we move back up, move to the outside of the lower band again, retrace to the higher part, move outside the higher part of the band, retrace down. You get the point. Unless we're in a very strong uptrend, right, which does happen, and you can see it happens over here. But diving in, okay, so we market opens right here, 9:30 candle, we pump up. I don't ever trade the opening candle unless I have a really strong bias. And then this next candle, we pump up, and we go shooting right into this gap. So this gap was right here at this yellow line, but it kind of disappears with the indicator as you move into it. Okay, so it shows only fresh part of the gaps that haven't been touched yet. So we are jumping in, and look at, we hit the exact midpoint. This was the midpoint of that gap down. So we tapped that midpoint, and I saw us instantly start to kind of give a little bit of a wick. So what did I do? I jumped in short right here at 833, and I always keep a tight stop. I only had about a 10-point stop on this trade. I always keep about a 10 to 15 point stop loss with this trading style, just because it's catching tops and bottoms, and you don't want to let it have too big of a stop in case, you know, it runs against you, and it allows for good risk reward. Okay. Then TP for this trade, I put at the low of this giant candle pretty much. So it was right here, about 40-point trade. Okay, and I don't have my Top Step X up, but it was on live stream this morning. I showed it. About 40 points there. That brought me from down 400 on the day to up 400 on the day. So that's about 800 bucks. Okay. But you can see, yeah, we pressed outside, retraced inside, and then we kept going. Okay. And again, retrace outside, come in, retrace outside, come in. Okay. And then I also called out this morning on live stream this level. Now this is a good level because it's lower time frame for rally gaps, which is blue, and higher time frame for rally gaps, which is reddish pink, and it's bright, which means there's a lot overlapping. Okay. Now again, I call this out. We move up into it. We start to wick. Okay. It's outside. This is basically the 3 steps you need. Outside the bands, touching and overlapping for value gap, and some sort of liquidity sweep. Okay. We had liquidity sweeps here. We move outside the bands. We see some wicks. It's touching the gaps. You could take a short. You could put like a 10 to 15 point stop. You put a 10-point stop, you would have gotten stopped unless you took it for already a 17-point trade. Okay. And even if you stopped out here, you can see we come up in here, tap the next blue for value gap, start to reject. You could hop in, 10-point stop, right? And you could target a low if you want. You target wherever you want, right? But it's good risk rewards, right? Because 10-point stops, I mean, that's pretty tight, right? Okay, so trade that back down, all right? Now, the only losses I took were this morning. I took in the middle of the band just because I was eager to trade, but you should not trade in the middle of the band, okay? I took a short right here. So there was a fair value gap here earlier, took a short, and I was up about like 10, 12 points. That one lost. And something else I don't really remember. Okay. But some other examples, something else I was watching. Okay. You want to watch out for candles that have quick pumps down, because if you have a candle that opens and quickly jumps outside the band, oftentimes it will retrace back in. So right here, we had this big overlapping fair value gap, right? What happens? We open here, pump down right into it, really far outside. You could have taken a long right here. Again, just hoping. You have to have a little bit of hope, right? But it's outside the band, touching the overlapping fair value gap. Okay, and liquidity sweeps right here. This low, this low, this low, this low, right? Okay, you could put a 10-point stop. So if you're wrong, you cut it quick, and if you're right, great. And you can target the midpoint of that band if you want, and literally jump down. You would have gotten tapped in or marketed in right about here, and within the next candle, 30 points of profit, right? Now today's a pretty volatile day, so that's not going to happen every day, right? But you can see how you could use the strategy. Okay, I also took a short here earlier. I wasn't super convinced with this one, but I still took it. It's just one higher time frame for value gap. This could be 5 minute, 10 minute, 15 minute for value gap. Okay, it's just one because it's not very bright. Okay, but we pressed outside the bands a little bit right here. I took a short right here, 10-point stop, got pretty close to the stop, and then I targeted the low right here. So this is only about a 1.4R. Okay, targeted just this little swing point, or this for value gap if you wanted. But you kind of see where I'm going with this, right? See where I'm going with this. And then we've been steadily downtrending since, but that's kind of the trading model I'm going to use going forward in 2025. I've gotten about, I can pull it up. Let me pull up the Top Step X really quick. I started an eval on Wednesday just for fun to trade during FOMC. And these are the stats here. So, yeah, started this on Wednesday morning, up 1866, 66% win rate. Average win loss right there. And then if we look down here, so let's see, average trade duration is only 3 minutes. And then we made 600 on, again, the 28th or 29th, 600 on the 30th, and about 530 today. Okay. I don't think, yeah, there it is. So yeah, these trades right here, you can see pretty small losses except for this 530. That was during FOMC, and my brain did not process how big of a stop I actually needed. Okay, but you can see that if I didn't take that FOMC trade, which I don't trade during FOMC anyway, it's against my rules, the account would be at like 2.3K profit, but anyway, we took it. But the only other losses besides that were today, $130, 260, and 220. So again, about 10 to 15 points at most. But you can see the winner we got was 150, then 800, then 200. So at minimum, pretty much 1 R, right? But down here as well, 500, 400, 300, 300, 300. So at least 1 to 2 R, if not more, depending on the volatility of the market. Anyway, we won't keep it too long. That is the trading model. Okay, if you have any questions about it, leave comments, questions, concerns down below, and I'll answer them. See you guys.